And the market can change that fast. Hi, welcome back to another Coffee with Coleman, where we love to discuss Washington, D.C., business, real estate, all that good stuff. My name is John Coleman, and I'm a real estate agent here in Washington, D.C. with the Jason Martin Group. So, how's the real estate market going? It's a question I get all the time from people I know and I don't know. And frankly, there's a lot to dissect here, so I hope you're sitting down. The DC market started early this year. Honestly, it was in January when the spring market really started to kick in. However, obviously 2020 was a little bit different of a year. 2020 has been crazy for everything, and the real estate market has been no different. From the get-go, the spring started early, it was super hot. And then obviously COVID hit. When COVID hit, the stock market started to take a little bit of a tumble, interest rates went way down, everything was going a little bit crazy, and no one knew what was going to be happening with the DC real estate market. To much of the surprise, the DC real estate market has been pretty darn resilient thus far. In fact, we are looking at a banner year for number of sales, prices, and everything going on. But that doesn't tell the whole story of what we're seeing today. I'm here to tell you that I think we're here amidst a shift in the market, going from potentially a really hot seller's market, going into a buyer's market. And I know my colleagues are gonna laugh me off the screen right now because some of them are so super busy that it could not fathom the fact that this market could be shifting. However, we're reading the telltale signs and this is what we're seeing. So I came across a really interesting stat from Eli Tucker, the head of the Eli Residential Group, also with our brokerage at Real Living at Home. What he found is that there are more condos on the market here in DC than that we've seen in the past 10 years. You'd have to go back to 2012 and 2011 to see this type of volume of active units on the market ready to buy. And frankly, the days on market are starting to tick up quickly. I mean, logically, this makes sense, right? Like, people aren't going to work downtown right now. You can't go enjoy restaurants and bars the way you used to. So the idea of being downtown so you can be close to everything, well, if everything isn't really everything right now, then it's kind of losing the luster of why you'd want to be there. So in response, we've seen a number of people getting up and leaving and going to areas where they can find one, more room because you need the home office, and two, some outdoor space because we gotta be able to get outdoors. Staying inside just isn't an option. So those two things have been a huge push for people looking for housing right now. But wait, John, all the articles we've been seeing for the past 2 months says the market's crazy, fire hot, everything's going nuts, buy, buy, buy. And those articles aren't necessarily wrong. People that are looking for that extra space and looking for that outdoor space are going and fighting hard for properties, especially with the interest rates being as low as they are. Their money's going a little bit further, meaning they're willing to fight a little bit harder for places. So in areas in the periphery, that's in DC and outside of DC, we are seeing people go after single family homes at a pace and a clip that we have not seen before. Like, I'm talking lines out open houses, lines down blocks of cars. Like, people are going and trying to find these houses and they're fighting for them hardcore. And there's other parts of the market that I think are gonna keep on moving. The first time homebuyer market, when you're looking at single family homes from 400 to 700,000, I think those keep moving pretty quickly. People are still clamoring to find those. However, piece above that, or general condos in those big block buildings, I think we're gonna start to see those struggle a little bit. And as those struggle, I think it could pull some of those other pieces down with it. So for DC proper, there's 3 indicators that I'm watching super closely right now. First is rents. Rents are going down. The big buildings, they are scrapping and fighting to get tenants in them. They are giving 2 months for free. I was walking down 8th Street the other day and it was 2 months free and no security deposit. Like, they are doing things that they haven't done before to try to attract people. I've heard, and I haven't validated yet, that rents could be down as much as 20% already, and that could continue to climb without some type of resolution for COVID-19. And why is that? People don't want to be in those big buildings with those elevators with no outdoor space if they can go elsewhere and they don't need to be downtown. The second thing is the number of forbearances we're seeing. This is a nationwide stat, but I think it's about 7.4%, the number of mortgages that are currently in forbearance. And that's probably not totally representative of the DC market because we're probably operating a little bit lower than that, However, on a national scale, 7.4% of mortgages are currently in forbearance. And with some of the CARE Act and some of the other things that could be coming to a close, we could see some of that come to light, meaning we're gonna get even more inventory on the market. And the third is I'm watching commercial. Week by week, we're seeing more and more commercial spaces close, which really saddens me. A lot of people have created some wonderful businesses in DC, and they're simply just hard to sustain in this market. But with every closure comes a few things. One is that's one less appetizing thing for that neighborhood to offer to a person moving in. The second thing is you have an owner of that and you have employees of that then no longer have income coming in and might be leaving the area because of that. So you're seeing even more movement because these commercial places are closing. Okay. Deep breath though, deep breath. Woosah. This is not the end of the world. We will be okay. However, markets shift. Market goes up and down over time, and it's important not to overreact with what's happening. Some things I would keep in mind is we might be seeing a slump because of the election. 4 years ago, in 2016, we did see a slowdown during the month of October. That could happen again, and that could be what we're seeing. Maybe after the election picks up, but there's no guarantee. 2020 tells us that we can't plan for anything at this point. The other thing we know is DC's resilient. Even in past recessions, we've seen people come back to this city. They want to be around here. There's something about being part of a city, and especially our city, that people want to be a part of. So once things normalize, I use that term very loosely, once things normalize, I think we're going to see some people coming back, and I think that the rents start picking up quickly and people start getting back in the market. Whether that's 2 months from now or whether that's 2 years from now is the big question mark that none of us know at this point. Maybe that was backwards, but we're here to figure it out. So that's what we're seeing right now. And if I had to offer you a couple words of advice is, one, again, don't overreact to it. Two, I talked about the commercial. Supporting local businesses is now more important than it ever has been. Make sure that you're trying to take care of them so they're around at the end of this so you can go back to the bar, hang out, grab your favorite drink with your friends, and go from there. They're having a tough time. We need to support them as much as we can right now. I have been. A lot of takeout for this belly. And the other thing, if you're a buyer, welcome to potentially a buyer's market in some of the realms. You're gonna have more leverage than people have seen in a long time. Are you gonna take advantage of that? And are you gonna take advantage of that while the rates are historically low? And the 2% is not something we ever thought we'd see. And while I think it could be the new normal, it wouldn't surprise me to see them go up again over the next couple of years. So taking advantage of that cheap money could save you a lot of money long term. All right, if you want more specific advice on the market that you're looking in, go ahead and reach out to me. I'd be happy to see you and tell you everything that we know about that market so you can make the best decision for yourself. Leave some comments below. I'll try to respond to them. And thanks again for stopping by another Coffee with Coleman. Peace.